Hello there. Good evening, everyone. May I remind everyone, as usual, to talk into the microphones. And I suppose when we are webcasting, obviously make sure you definitely do it. We've got a section in here, part two, where we are going to go through some training. So if I could start for the first item, apologies for absence.
We have apologies of absence from Councillor Wilcox and Councillor Nichols.
Thank you very much. And the minutes for the last meeting, 30th of October 2024. Hopefully we've all had chance to read this. We have before us those minutes held on the 30th of October. Are members content for me as chairman to sign these minutes? Nick?
So I want one very minor point typo, if I can. So not just on page 15 of the pack. So the reference there to the third paragraph down, it says the EY rep said that this was correct and included all audits up to March 2022. I think it's meant to be March 2023 in response to my question.
Fine.
No, very minor point, but yeah.
No, thank you. Thank you. Any other points? No. So can I have a proposer and a seconder out of the two of you? Thank you very much. So I suppose in that sense we could have a vote. That's unanimous. That is carried. Thank you. So I suppose I've got an announcement to make tonight. As some of you may or may not know, this is sadly Stephen's last audit and governance meeting. And I suppose just before he goes, I'd just like to say a few words on behalf of obviously the committee and I suppose everyone else that's attending tonight. I think it's sort of proper that we should recognise the time he's spent here under two administrations. So there's obviously this current one, which he's done 18 months with, and previously with Jeff and his Bob and Jeff and their administration. And I'd like to say, obviously, thank you for spending that time with us. I think you've been a very good support. Specifically relating to the process and some of the nuance feedback that we've been given, and I think it's probably fair to say that a lot of your advice I take as really well needed and sage advice, not just here in the meetings but also outside of the meetings as well. And on a personal note, I do consider obviously the time that we've spent. You've been a good coach, and thank you. You've got me up to speed, probably a lot quicker than I'd anticipated. Obviously, the hours we've spent together I think has been productive, and I suppose you've helped us try and unlock some of the art of public sector finance, and that's no easy thing. And I'd also say that David Walcombe, if he was here tonight, would probably thank you as well for the advice when we have any discussions prior to the meeting. And I'm obviously very grateful, I'm sure he is as well, about this support and assistance that you've given us. So on that note, I would like to say thank you for the year's service and the toil of working through audit and governance. And I suppose may you enjoy whatever you do next. And as I say, thank you on behalf of the committee. Thank you very much. Thank you. Thank you. Sorry, yes, Jeffrey.
Thank you, Chair. Or maybe perhaps I could add to those thoughts, having been the previous executive member and having worked with Stephen for a while. I'd say I'm very grateful and thankful for all the support and so forth he was able to give me through some interesting times, and I have no doubt that his involvement with this council will be missed going forward. So yeah, very thankful for Stephen's input over the last year or two? Thank you.
Yes, Bob.
Thank you, Chairman. If I could just say very briefly, in effect, on behalf of the previous administrations, the Conservatives, we're very grateful to you, Stephen, for all the work you put in. We know you really put in a shift. We appreciate it a lot. Thank you very much.
Thank you. Oh, Carl.
Yeah, just to echo these comments, I'd just like to thank Stephen for all his efforts in helping me particularly and the new administration get settled in and kind of started us working towards kind of financial sustainability for the long term. So thank you, Stephen.
Thank you. You'll be missed. So on that note, declarations of interest. Do we have any declarations concerning the agenda tonight? No. Thank you very much for that. So very swiftly then, we are on to training. I've got to read this because we're obviously not going to broadcast this. So as this item is likely to involve the disclosure of exempt information, I move that under section 100A(4) of the Local Government Act 1972 as amended, the public and press be excluded from the meeting for the following items of business because they involve the likely disclosure of exempt information as defined in paragraph 3 of part 1 of schedule 12A of the Local Government Act 1972 as amended. It is considered that in all the circumstances of the case, the public interest in maintaining the exemption outweighs the public interest in disclosing this information. So could I have a seconder, please? David, thank you very much. Can we have a show of hands to indicate whether you support the motion to exclude the press and public? Those for? Thank you. That's unanimous. So I'm assuming the webcast has been paused. Is that okay? That's good. Thank you very much. So next section of section 106 update report. Jackie. Oh, Carl.
Yes, thank you. This is the section 106 update report. This is the annual report to the Audit and Governance Committee on section 106 at East Herts Council, and the ongoing work of the section 106 programme manager Jackie Bruce. The report itself provides an update on East Herts section 106 financial contribution identification, collection and allocation, plus information on the 2023-24 infrastructure funding statement. A copy of the infrastructure funding statement is included as Appendix A. And feedback from the internal audit undertaken last year. A copy of the final report is included as Appendix B, as well as information on other Section 106 related income generation from monitoring fees and Section 106 information requests. Section 3.19 of the report includes an overview of historic Section 106 contribution collection and allocations from 1st of April 1996 to 31st of March 2024, with details of the total amounts of contributions received, spent, allocated and unallocated. The chart in section 3.23 provides more detailed information on the total amounts collected and allocated over the last 5 years, and an update on the contributions collected and allocated in the current financial year from 1st of April 2024 to the end of September 2024. See section 3.26 for the figures. Regarding the annual infrastructure funding statement, members will be aware East Herts Council is bound by legislation to produce and publish an annual summary of income and expenditure of the financial section 106 contributions collected by the council as the annual infrastructure funding statement, the IFS. The IFS must be published on the council's website before the 31st of December each year, and the final version is attached as Appendix A for your consideration. This is the 5th infrastructure funding statement produced by East Herts Council and provides detailed information on section 106 for the last financial year 23-24 in a format as required by legislation. The highlights are as follows. So, new section 106 agreements. There were 11 new section 106 agreements signed in 2023-24, providing £1,171,381 in identified East Herts Council financial contributions, including £11,700 monitoring contributions and 23 new affordable housing units. Historic contribution information, page 7 of the IFS, provides further details on total income, expenditure and allocated and unallocated contributions from the 1st of April 1996 to the 31st of March 2023. 23-24 contributions collected, a total of £5,304,487.68 was received from 86 contributions triggered for payment from 11 individual section 106 agreements. See IFS page 9 for details of the individual developments and a breakdown of the contribution use headings. 23-24 contributions allocated, a total of £4,859,523.51 was allocated and spent on 21 individual projects or identified uses from 70 individual contributions from 29 section 106 agreements. Detailed information on the individual contributions allocated in 23-24 can be found from page 12 onwards of the IFS, with Appendix 1 providing detailed information on the contributions allocated. In addition, members will be pleased to see details in the IFS of the various council projects and services funded with capital and revenue contributions and the 7 external projects across the district supported with section 106 in the financial year 23-24. Update on the audit of section 106 at East Herts. Members will recall that an internal audit was undertaken in 2023, and the report provides an update on the feedback received, with a copy of the final report included as Appendix B. It is worth noting that the final feedback was very positive, with substantial assurance that there are effective controls and a robust framework in place for the collection and allocation of Section 106 contributions. This is the highest grading, and only one low priority recommendation was noted. A checklist with the Section 106 Programme Manager to use, and this has been implemented. Finally, the report provides information on Section 106 income generation and information requests received. Members should note that the monitoring and Section 106 status confirmation fees go to support the Council's internal budgets. The Section 106 Programme Manager is happy to answer any questions members may have on the report, the infrastructure funding statement and the internal audit report. Should members have more specific Section 106 questions outside of the remit of this report, please could they email the Section 106 Programme Manager directly so she can give a detailed response. Thank you.
Thank you very much, Carl. Questions, comments? Bob?
Thank you very much. Thank you very much, Carl, for your presentation. Question for Jackie, really. Relative to the numbers, this is minor, but there is a relatively minor amount that's unallocated, and it's of the order of 100 and something thousand, I think. I haven't got the page open in front of me. And I kind of get that, but on the theory that these agreements all arise from planning applications and the planning application is conditioned on Section 106, theoretically, how can there be anything that's just floating around that nobody quite knows what they're going to do with it? How can that happen?
Thank you, Councillor Dewing. Technically, they're classed as unallocated because they don't have a named project within the wording of the contribution. That's how I've classed them, as unallocated. If you look at page 8 of the infrastructure funding statement, I've broken down each individual unallocated contribution to identify what the contribution is. For example, High Cross in Ware, we have £10,523.28 identified as children and young people contribution. Now it's classed as unallocated because it doesn't name a particular play area. So it's used for play areas within the vicinity of High Cross and the development. So I'm working with our team in operations to actually upgrade a local play area using that contribution. So that's why it's classed as unallocated. If you look at, it's £288.86. I've been working very closely with High Cross Parish Council to spend some money there. We've got 83,000 in Standon. Again, I'm working with Standon to allocate that funding. And again, we've got Turlings Park and the Gilston area. Basically, we've got £29,000 left unallocated, but that is open to the local community to apply for, because we do have some money left that's already been allocated to certain projects, such as the Turling Park green flag application. They're going for signage. So I've already allocated within it, but I've got that amount that's free for the local community. So I'm working closely with them. And again, in Ware, we've got 2 parks and gardens contributions. Now I'm working closely with our operations team again, because they actually want to do some work to replant some of the actual green spaces in Ware. So yeah, so technically unallocated, but I've been working very hard to make sure that we actually allocate them to the use in the local area. And then going forward, everything is going to have a named project, because it has to, because of the legislation changes. So.
Thank you. It's a really good answer. Appreciate that a lot. Just following on from that, should there be a clerk of a parish council watching this meeting and their ears prick up Section 106 money available, realistically, if just a parish clerk somewhere in the district catches on to this and thinks, oh, there might be some money available here, and they apply to East Herts District for some, realistically, am I right? They're probably going to get a no by way of an answer. I think it might help them to know that. You see,
My default answer is normally no, because unfortunately we only get Section 106 funding if there is a major development in the local area. And then once the development comes along, I work closely with the planning officers and the local organisations such as town and parish councils and local and internal officers to make sure that the contributions that we are able to claim are allocated for uses that, you know, the local community wants. It's not just down to me. Unfortunately, I do deal with a lot of parish councils that, you know, I'm quite open. I really want to hear what's going on in the district just in case a development comes along so that I have my list of potential projects. But unfortunately, 9 times out of 10, my answer has to be no. Yeah. But, you know, if there are any parish and town councils listening, please do get in touch to let me know what you would like if, if development comes along your way.
Thank you, Jackie. Any other comments? Mark?
Just a quick one. Is there a period of time where the money has to be spent before the developer comes knocking on the door saying, you've not spent it, I can have my money back, please?
Yes, there is. Normally it's 10 years. There are some developments that we have that have written into their agreements 5 years. I have a master spreadsheet where I list absolutely every single contribution going back to 1996. And I've actually rag rated all of it. So I have an ongoing program of ones that I know are coming up to their, in effect, clawback date. I work very hard to actually make sure that we spend the money how it should be spent within that period. And I'm pleased to say I actually haven't had to give any back.
Thank you. Any more? Nick?
Yeah, thanks. I think the report is excellent. It's in terms of its clarity and I think it's fantastic. It's well done. I think it's great. Just a quick question of monitoring fees. Just does the amount we charge cover the cost of that we are obliged? I know we are allowed. We have to be proportionate, and yeah, I think it's talked about £300 and then another £300. It doesn't sound a lot, but just keen on the view and whether that's in line with charges that others have in place.
It's a sum that was set several years ago. We are in the process of actually looking at that and doing some benchmarking with other local authorities to see what they do. Because you're right, £300 per contribution within an agreement plus £300 is not sufficient money to fund the work that actually goes into setting up the Section 106 agreement and monitoring it and claiming the actual contributions, working out the indexation and things. So we are actually looking at what other authorities do and the potential whether we actually increase the amount or whether we go for a percentage is still open. But it is something we're looking at.
Thank you. Any more? I have a question that was tabled to me about who's involved in the allocation. Now, is it just East Herts, or are other bodies involved in the collection? Well, not the collection, but the allocation of 106 money.
Technically, no, but it comes down to the fact that when we actually draft the Section 106 agreement, if there are projects and uses within an area, I work closely with the town council or the parish council, or potentially external organisations such as sports organisations, to actually identify their use or their actual wants and needs, so that we can write it into the agreement. And then when we actually collect the money, I can then get back in touch with them and say, I've now got the funding in, are you ready to actually use it? But when it comes down to sort of sitting down and going, we've got a pot of money here, I don't have external people in to actually help allocate, because of the legislation, I have to have a named project. So it's not like I've got a pot of funds to actually distribute. They're all to named projects and uses.
Okay, certainly. And the other thing is the failure to collect. What percentage do we never get the 106 money?
Well, I'm pleased to say it hasn't happened yet.
But do you foresee, or have we come very close to?
I have come very close with a development that potentially went to insolvency, but working with our legal team and some knowledge of finance and things, I managed to actually persuade them to pay, so we didn't have to take them to court.
Excellent. Okay, thank you very much for that. So on that basis, I'm assuming no other points. Thank you,
Yeah.
Carl. So the recommendation on page 26 is to note and comment on the contents of this report, the 2023-2024 infrastructure funded statement, Appendix A, and the SIS internal audit report, Appendix B. Right. Yeah, that's right. Sorry. So can I have a proposer and a seconder, please? Bob proposing. Seconder. David, thank you. So those in favour? Unanimous. Thank you very much. That is carried. So thank you. Yes. I'm assuming you want to stay. Yeah. External audit update. Who's this for?
Thank you.
Okay, thank
So, my name's Paul Grady. I'm the partner at Azets, and Azets is the appointed auditor from the 23-24 financial year onwards. We also, for those of you on the committee at the time, we previously reported to you in, I think, February, online, as we happened to be in Edinburgh at the time, in terms of progress as at that time, in terms of 23-24 audit. Things have moved on in the world since then. It's now a lot clearer in terms of what the government's has now put in place for addressing the backlog of audits across the country, and indeed the situation that East Herts has found itself in. So what there are two documents in front of you that set out where we are now in terms of the situation. One of them is a briefing document which summarises a lot of the guidance and statutory measures that are now in force in terms of both addressing the backlog and what comes next. And then the progress report, which is the one that we will talk through, sets out where we are in terms of the audit and what is likely and what is not likely to be able to take place before the next statutory backstop, which is the 28th of February. Before that, there is the statutory backstop, which applies to the audit of accounts before we were appointed, so the ones that EY were looking at. The statutory backstop for that is the 13th of December. I understand your public inspection period doesn't close until the 18th of December, so it's unlikely, working on the assumption that you won't be able to have received the closure of those audits before the 18th or 19th of December, and therefore you will have missed the backstop date for the 22-23 accounts and earlier. The following one is 28th of February, which obviously is not a long time at all after it, from that particular one. We undertook the work that we could earlier in the year in anticipation, and this is work which would need to be done in any event. When we look at what would be left to do to complete an audit that's for an organisation which has no audit assurance for the previous 2 years, there is clearly not going to be enough time in order for that work to be completed by the 28th of February. So we are working on the assumption that we will also be issuing a disclaimer of the accounts by the time we get to that particular backstop date. At the moment, the council hasn't produced any accounts for 23-24, so we can't actually issue anything until those accounts are produced. And of course, there is then the 6-week statutory inspection period that needs to take place. So those accounts would need to be produced. Notice given to the public and the inspection window to have taken place in order for us to be able to then conclude on the 28th of February. I think the previous meeting, your previous auditors reported interim findings in terms of the value for money work, and my understanding is that will be updated into its final version when they conclude their work in relation to the earlier years. We will then take that into account in terms of our own value for money reporting. The requirement for us to issue our own annual auditors report and value for money work for 23-24 is, to quote the guidance, at a time that the auditor deems appropriate. Thereafter, from 24-25, it'll be every November when a report will be with you, containing findings to date in terms of work that we've done. My thinking at the moment is that there's little benefit to be served by introducing further delays in terms of the value for money work. So as soon as EY's work is finished, and in line with the backstop dates which are in place for 23-24, we will also issue the value for money work. We've undertaken our own work on that earlier in the year. Clearly, there were findings raised by the predecessor auditors that we will need to pick up on, but we will also be issuing it with the assumption that there won't be sufficient time for the authority to have responded, because it would just not be possible to respond given the compacted time available, and then pick up those issues further in our 24-25 reporting as we go through 2025. So this report then sets out those areas which we would intend to undertake 23-24 if possible, but as I say, it does depend on the accounts, when the accounts are produced, but also those areas where it won't be possible, and it starts to share with you what the build back position may look like over a period of years to come. The guidance in a nutshell talks about auditors accreting evidence over the next few years in order to build back that evidence to support the potential return to a clean opinions at some point in the future. And until that point, it will be whilst we will undertake this work and build it up, and there'll be interim disclaimers most likely on the way to getting there. It also needs to be borne in mind that in terms of accreting the work, obviously the years for which we're responsible, we can do that work and accrete it. For the years before our appointment, which have been disclaimed, we will need at some point, in order to get back to a clean opinion, to revisit those years and actually undertake elements of the work that's needed in order to maintain the trial from your last previous audited position to whichever point it is in the future where we are once again issuing clean opinions. That wouldn't be the case for all balances, but it is the case for those balances where there is an unavoidable connection to the prior year. So if I put it in a nutshell, your property, plant and equipment valuations are valued each year. At a particular point in the future, we can take those valuations for that year and we can gain full assurance over those. That becomes your comparators in a subsequent year, and then eventually it rolls out and that disclaimer moves away. So we wouldn't need to revisit your property valuations. However, for the reserves parts of the accounts and for other balances which are inherently linked to a previous audited position, such as anything related to historical cost assets, there is no other way around it than at some point we will need to trace through all the movements that would have impacted your reserves in the disclaimed years to go back to the previous audited position in order to have that full trail and to be satisfied that the movements that have taken place are correctly reflect what your reserves are now saying. And of course, the general fund is where the biggest risk of that lies, because the general fund is inherently a feature of, to a large extent, income and expenditure in disclaimed years. The only way to gain assurance over a closing position for the general fund is to have assurance over the opening position and assurance over the movements which led to the closing. So that's quite a long way of saying that it'll be a number of years before I think clean opinions are there. But what we will do in future meetings is share the evolving build back plan. We are part of a cross-firm group which is discussing various different methodologies in order to be able to address precisely those issues. And then that group is discussing with the FRC, because all firms are very keen. Of course, this is an unprecedented situation, very keen. No firm wants to be the firm which boldly presses ahead with a novel way of doing something, only for the FRC to come along and say, well, that was a nice try, but here's your fine. So there's a lot of thinking going into that, and a cross-sector approach that will apply in terms of the nature of the work that's done. That's still going on, and obviously we're still inputting to that, as are other firms, and those discussions will continue, and I'll update future meetings in terms of where they've got to and what impact that may have on future work. So I will pause there. Martha can very briefly just touch on what we potentially will be looking at in 23-24 once we've received the accounts. It's set out on the slides, pages from page 9 onwards. Is there anything particularly you'd want to draw out there, Martha?
So Paul has already touched on most of the stuff, especially reserves and the other balances, PPE. So I'm just going to draw attention to the amber beds where, I mean, if you look at the pages 9 to 15 or 93 to 99 of the audit committee papers, you should be able to see the work that we intend to audit in terms of our work. However, there are some areas which are in red and amber that we might not be able to get assurance from. For instance, we've got the ITGCs. Well, the ITGCs are done, and I think it starts as part of the approaches are led by Stevenage. So we've got recommendations already responded to by the Stevenage Council. So I think for some of them, we'll probably just go back to them so that they can address those. And with the pension liability, which is a significant risk according to our audit plan, we do not currently have any assurance from the pension fund auditor. Our understanding is that we'll never be able to get assurance until 25-26 at the point where we will get the report from the next triennial valuation. And then for cash flow statement and other notes, won't be able to get an assurance for 23-24 because the cash flow statement is tied to opening balances over which we anticipate not having assurance on. The last bit, which is just the movement in reserves and the reserve movements, which Paul has already touched on, won't be able to get assurance on that too. So, Paul?
Thanks, Martha. So the only other thing to draw to your attention, as Martha said, the recommendations in here in respect of the work we've done over the IT general controls, and the other slide on page 16 of our pack, the value for money slide. So we did not identify in particular any significant risks for the value for money work as part of our planning. Not in part because we at that point the predecessor auditor hadn't reported for a couple of years, and we were waiting to see what comes out of that. We now know what's going to come out of that. So in our updated reporting, we will also update the value for money side of things and the response or the council's response to whatever the final report is from EY. Happy to take any questions that members may find helpful.
Thank you very much. Questions and comments? We've all had time to read it. Bob?
Thank you, Chairman. I'm conscious it's me again. Every time this comes up, I just feel it's right that we make it very clear that this mess is absolutely not of this council's making. And perhaps particularly if this is Stephen's last meeting, it's important that we're very clear on that. So I'm sure what I've said is correct, but if I could just invite you to just confirm that it is true, correct, that the mess in the accounting of local authorities is not of the local authorities making, and it is not of this council's making.
So I think in general, it's multifaceted in terms of the reasons for this to have happened. There are some instances where it's councils that have not been able to keep pace with the level of change required. There are councils which have, all councils in fact, since the start of the previous decade have faced increasing financial challenge. One of the places where financial savings are made is in support and overheads. That includes finance team. At the same time, councils have invested in significant capital schemes with the aim of offsetting loss of income from other sources. Those schemes are inherently complex, challenging, difficult to account for. When that takes place at the same time of a reduction in capacity in a finance team in any particular council, it's not surprising that delays occur. At the same time, the abolition of the Audit Commission meant a change in regulation. The regulator focused far more in terms of the nature of work required on property, plant and equipment valuations, pension liability, actuarial reports, and the testing of those, significantly increasing the work that was required there as well. So you have a perfect storm where you have finance teams which are far leaner than they used to be as councils responded to austerity, with far more complexity in the financial statements than there ever used to be, but fewer people to deal with them, and a greater burden of audit inquiry coming from auditors across the piece, across the country, because of the change in the regulatory burden that also came along with the abolition of the Commission. So I think it is multifaceted, and where particularly those elements lie across different councils will vary depending on the council, depending on the complexity in place. Not every council, of course, is in the position of having disclaimed prior years, although the vast majority are. The ones that aren't are by and large the ones with far less complex setups in terms of the investments that they have in place, the sheer size and scale of their capital program, and where they've been least affected by some of the savings that they've needed to make over the past 10 to 15 years as funding was more constrained. So I think, yeah, it is a multifaceted piece in terms of how the situation has arisen.
Much longer answer than I was expecting. I was expecting a one-word answer, which was yes. I'm involved in local government accounting in another place, and I think in a nutshell we would say this is entirely down to EY, your predecessors. I appreciate you've got professional deference not to criticise a fellow professional in public, and basically that is it. And I just think it's important that our residents in this case understand that this is not of Eastern Ots District Council's making, and absolutely specifically not in any way, shape or form of Stephen Lynette's making, given that he's done a good job holding the fort together for so long. So I was hoping you would just say yes, and I'm going to invite you to have a crack at just saying yes a second time.
Well, well, thank you for that invitation, but it would be oversimplistic to say yes in that respect. And clearly, the relationship between the council and EY is not one with people involved with. It would also be, I think, inappropriate for me to label a judgment over that relationship, which we haven't been a part of over the past 5 years to understand the details of that.
Stephen, did you want to mention something?
Yeah, just to say to members of the Society District Council Treasurers, which yes, it is as exciting as the title says, and have made some asks of SIPFA and government, and SIPFA are minded to say yes to all of them, but some of it actually requires government to do some legislation. And the first is to have the materiality levels, which for district councils means with our assets, materiality is like 0.7% of our balance sheet value of assets, which is clearly, it just creates extra work. So we're asking that there be two materiality levels, one for revenue expenditure and one for the balance sheet, that will reduce the amount of work that has to go on. So we're asking for the SIPFA to recommend that so the regulators deal with that. Ask number 2 is about external valuations of property and equipment, and also property, plant and equipment. If the valuer is suitably qualified, it should not be necessary for the external auditor to then find another suitably qualified external valuer who will, and you get 2 valuers in the room, they'll always come up with a different answer. So to cut all of that out, it is the valuation of property, plant and equipment that takes almost forever, and always we have disagreements on it, to say that if a local authority has employed a RICS qualified valuer, that is good enough, don't argue with it. Ask number 3 of SIPFA, and we want them to reduce the length of the accounts and the amount of disclosures within the account. Local authority accounts used to be about 25 pages long. They're now over 200 pages long. The NHS produce a boilerplate set of accounts, which are precisely 12 pages long. So we're asking SIPFA to extract their digit and make the accounts shorter. On pensions, we're asking the government to legislate that pension fund accounts are separate and in the pension funds of the county council, and that district councils do not have to deal with this other than on a defined contribution basis, i.e. we don't have to have actuarial valuations and then another actuarial valuation, etc., etc. So it just cuts it out of that. Ask number 5 on the collection fund is that we just account for the collection fund as a discrete statement, and we don't have to do the agency basis that we do now, where we have to complete the collection fund, and then the county council has to assume its portion of the collection fund, its creditors and debtors in income expenditure. It's just the collection fund is a separate statement, all of its own. We cut all of that out. Ask number 6 is that we ask that valuation is every 5 years, not every year. and that there are prescribed indices to use to determine values in between, and that impairment is restricted to circumstances when assets cannot be used for its intended service purpose. At the moment, we impair assets for all sorts of different reasons, but it should only be on the basis of its intended service purpose. And ask number 7, the expenditure funding and analysis statement, which if anybody can understand that, I'll give them a special prize, because I struggle to understand what it is. We think it should be very much simplified, and by taking out all the valuation stuff and all the pension stuff, you're effectively left with capital financing. So we ask that the statement be made much, much simpler, and it'd be basically a capital funding statement. And with those 7 asks, we believe that we can streamline district council accounts, cut down the amount of professional valuers and pension actuaries that we need to use, and also make them much shorter. And that's what the Society of District Council Treasurers has asked SIPFA. SIPFA is nodding furiously in agreement, but some of it does require government legislation.
Thank you very much, Steve. That was good. Questions? Any other questions, Nick?
Yeah, just on so on the 23-24 accounts, and you made the comment, Paul, around that accounts haven't been produced yet for 23-24. So question, when will they be? And recognise that there were some changes that to the accounts that are being discussed and proposed, and as Stephen says, may require legislation to change it. That's not going to happen anytime quickly, I wouldn't have thought, but it all sounded very sensible things. But in terms of where we are now, and producing those 23-24 accounts, just interested to know what our timeline is. But
okay, thank you. Would you know, Stephen?
My member of staff who's actually responsible for completing the account had been set the target of doing it by Christmas. Unfortunately, she has been off this week, and she may be off next week. So the intended timeline was to have them done by Christmas and do the public advertisements starting in January. However, I can't guarantee that now because she has been off sick this week.
Thank you. You got a follow-up, Nick, or you okay?
no, except to say I imagine therefore it will impact when the work can be done on the accounts that
yeah, so it will so if let's say that by the end of December or early January, there's then 30 working days as an inspection period. That would take us up until late February. So there would just about be time to meet the backstop. But what it would do is impact the what we could do with those accounts. So when we talk about undertaking some work and accreting assurance into future years so that there's less to do to recover in future years, it pushes that work back because we won't be able to do that work without the accounts.
Thank you. Thank you. Any more questions? I have one though. It's probably a sort of rather unfair question. Are you getting the necessary traction and engagement with the council here? Is there any issues at the moment, or is it thumbs up, 10 out of 10?
I wouldn't say 10 out of 10. It's we weren't able to complete all of the work we wanted to do at the interim stage. But we had engagement from the council where the things that were keeping the council busy and sort of officers busy, which meant that we weren't able to get everything. We arranged an additional interim visit to undertake work that we weren't able to get done at the original plan time. Managed to get more done then. And eventually we sort of got to close to where would want to be in terms of the work we do, or work we can do before the production of the financial statements in and of themselves. Over the past few months, there's not been much more for us to do. So there's a bit of finishing off. As you see, the IT controls work is done and reported to you. There is a little bit we do need to do that we can do without the financial statements, but we're also conscious that management has been dealing with the predecessor auditors, and with a relatively small finance team, it's quite hard to deal with two sets of auditors at the same time. I think, would we have liked to have been able to get more done? I think yes. Is the gap massive? Not too massive, I don't think. But equally, it now rests on the production of the financial statements, and that would unlock the ability to get more done then.
Thank you for that. So on that basis, I suppose we this is really just for noting, obviously, it's an introduction, and thank you very much for coming along, and hopefully we'll see more of you over the coming sessions.
Sure. Yeah, absolutely. We so certainly every time we have a report, we'll be here. I think the next meeting is sometime is towards the end of January, and that's where we'd intend to be bringing our completion report in, pending any disclaimer that we then proceed to issue. So we would also be here then, and also with an update on the assumption that we've received all the final documents from EY, then an update in terms of straight to our final position in order to meet the next backstop.
Excellent. Thank you very much. Right, we move on to the next item. Sorry, Simon, 1 second. If you want to go, feel free.
Thank you.
But I'm sure it'll be interesting in the next session.
Yes, no, it undoubtedly would. It's only we've got a fair distance to travel. That's the only
okay.
The only pull.
Thank you very much.
Thank you.
So shared internal audit service, Simon.
Thank you, Chair. Members may recall that the committee received periodic updates on internal audit activity and the outcome of its work. This is the second progress report for this financial year. Provides details of finalised internal audit reports issued between September and November, and shows the status of all internal audit work being delivered in 2024-25. In the spirit of trying to keep it brief, I'll highlight what I feel are the key points for you. Paragraph 2.2 shows the outcome of 4 reports that have been finalised, including the associated assurance level and the number of recommendations made. Paragraph 2.3 summarises the status of all audits included in the work plan for this year. You can see 16 are shown as work in progress or finished, and a further 8 are assigned to members of the internal audit team, ready to start over the forthcoming months. There's more detail on the status of that work in Appendix A of the report, if you wish to have a look. Paragraph 2.6 refers to the status of high priority audit recommendations. These are referenced in our progress report for tracking purposes and are shown in detail at Appendix B. There's just the one high priority recommendation that's been added to the schedule since the last progress report. This relates to re-engineering the business processes within the licensing service to specifically address the weaknesses that we've highlighted in that recommendation. And lastly, paragraph 2.7 to 2.9 shows our performance indicators and how we currently stand. Just to say that since writing the report, 3 further draft reports have been issued, so that takes us up to 48% from 38. We've recently issued audits of business rates, creditors and risk management. Once they're finalised, they'll be circulated to members in the usual way. And just in conclusion, the key message to pick out from that position is that there's currently no risk to us being able to produce a robust annual assurance opinion at the end of the financial year. Thank you, Chair.
Thank you very much, Simon. Questions, anyone? Or comments? I think you've got off quite lightly then on this. Thank you very much. There are 2 recommendations. detailed on page 111. Members are recommended to note the internal audit progress report and to note the status of critical and high priority recommendations. So thank you for that. This item's not for voting, it's just for noting. So thank you, Simon. And the works programme. Any change, Stephen, to the works programme?
Chairman, the works programme is there. I would remind you that you need to nominate some training for the future. The dates of the meeting around March, April are obviously fluid depending on when you need to receive the disclaimers of opinion. And you will probably need either at the January meeting or at an additional meeting, receive the disclaimers of opinion from EY. So I'm on the caveat that there would probably be more meetings than are actually in the work programme. And the dates for the work programme into the future are on the dates that were agreed at full council at last May. So if you want additional meetings, then again, you can have additional meetings. However, I would just bear in mind that you're probably going to have more meetings than you ever wish for between now and May.
Okay, thank you for that, Stephen. Yeah. Comments. No comments. Oh, Mark.
With the pending changements in procurement, is it worth adding procurement to procurement being one of our training sessions in the future? Something around procurement, maybe.
You will be receiving the procurement strategy at your January meeting to scrutinise prior to the executive recommending it to full council for adoption in March. So the shared service procurement manager and all the one of the procurement managers from the shared service, which we have with Stevenage on procurement, will be here to talk you through that procurement strategy and also the updates to the social value policy as well. So I'm sure they'll take you through what the changes to the procurement rules are for the adoption of that procurement strategy. So.
Okay, thank you. Are you okay with that? Okay, thank you. Nick?
Yeah, and just I'm sort of not quite clear in terms of all the various disclaimers that Stephen's referred to. So, and when they're likely to come. So we've got the Ernst & Young 21, 22 and 22, 23 opinions. And then we've got as it's 23, 24. And I see on here there's also planning for 24, 25 in March. And I'm just not quite clear what's going to fall when in terms of the order of those and when we will need to see it. But so that's the only bit that's not clear in my mind. Having last meeting and this meeting, there's been quite a lot around the external audits and the timelines. So and I don't think that's all been factored into the work plan yet. As Stephen says, we may need more time.
Certainly, I'm inclined to agree, but I don't personally know how to resolve this at this point, though. Is there any sort of?
I simply don't know, Chairman. I can't tell you when we reach the end of the public inspection phase what then happens with EY and the process they need to go to arrive at their disclaimer. But I can't tell you that at present because they were all working to a deadline of the December, and then considering that we advertised for public inspection the 21-22 accounts, and they had been auditing the 21-22 accounts through 22, 23 and 24, to then turn around and say we hadn't produced a statement of accounts and that the inspection period was faulty was a bit of a surprise, to say the least. So therefore, on the line of least resistance and to satisfy EY, I recertified both years' accounts and reopened the public inspections on them. So I don't quite know why the inspection period was suddenly faulty when they had been auditing these accounts. In fact, they said in the meeting that this committee had in May 2022 that they were about 6 weeks away from completing the audit of the 21-22 accounts. So I am bewildered by their statement that we didn't produce any, because what the heck were they auditing then? And as they've said we didn't produce them, I should be asking for, well, if I were here, I would ask for our money back. But I will make a note for Alison and my successor to request the money back, because we clearly weren't auditing them, were they? Because we didn't produce them. So I'm afraid I don't know, Chairman, how long it will take after we reach the end of that inspection period and what fandangos we will go through to get to that exception, disclaimer of opinion. And then we've got the assets disclaimer of opinion to go as well. So I simply can't tell you what the timescales will be.
No, fair comment, Steve. Yeah, thank you. Okay. Any more on this? David?
To draft some sort of timetable for us in time for the next meeting, so that in the best case scenario, we can have some sense of what meetings we need to have next year and what will be discussed at each of them. And maybe if the chair could liaise with Steve before he leaves to get some sense of what that'll be, because I'm very confused about what's going to happen when next year.
Well, I think on the basis that we've got a day, half a day of Stephen's time, that isn't going to happen yet. So yeah, I think we're going to have to pick it up at the next meeting and see how close we are to deciding on anything, or not deciding, being informed on anything. So okay. So unless there's any more on this, the recommendation on page 122 is to approve the work programme as set out in the report, which there are question marks still, but we recognise that, and to specify any training requirements, which I think was mentioned about the procurement as an additional, or not an additional, but it will probably be implicit in the procurement delivery presentation. So I'm after a proposer and a seconder for this programme. Jeffrey, thank you. And a seconder? David, thank you very much. Could I have a vote on this? Those in favour? That's unanimous. Thank you very much. So on that basis, we reached the final hurdle, urgent items. There are no urgent items, which is very good. So on that basis, we can conclude tonight's meeting at 9:01. So thank you very much, and thank you very much for your time.